Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, it's good to be back.
John, Arizona silver exploration moved up again this week following last week's jump on news that drilling at the Ramsey project intersected promising geology. I understand you participated in a site visit on Tuesday. Do we have an emerging discovery?
I believe that we do have an emerging discovery. Gwen Preston of the Resource Maven newsletter and myself, we both visited the project on Tuesday. The RC rig was not running because a hose had broken and the core rig was just getting set up. So we didn't really see anything that isn't in the public domain. But from talking to Greg Hahn and Isaac Nelson, the chief geologist, I got the impression that there is a lot more going on to this Ramsey system than one would ever have guessed from the Ramsey vein mine that was intermittently underground mined between 1921 and 1962, where they hauled out a whopping 15,000 tons of very high-grade ore, sort of 30, 40 ounces per ton silver, and probably produced about 50,000 ounces historically. What we're seeing take place is a blind discovery under gravel cover. It appears to be about 100 meters thick, so that was a formidable barrier for the old-timers. Greg mentioned that they found one small drill pad where somebody did attempt to drill in the projected direction of the Ramsey vein system where it had been cut off, but they appear to have given up after going through maybe 100 feet of gravels and said, there's nothing within our mining reach going on here. So this project, we still need assays to confirm. I'm relatively confident that based on the similarity of the geology that we are seeing in the fault offset downdropped extension of the Ramsey system, that we will get a few meters of very high grade silver. But the really big question will be how far into the hanging wall and the footwall rocks does disseminated silver mineralization extend? Because this is not a goal of trying to find a 2 million ton deposit of high grade silver. The goal here is to find a bulk tonnage open pit mineable system similar to the Real de Angeles deposit in the Zacatecas region of Mexico, which originally was also a high-grade underground mine similar to the Ramsey vein, but which was eventually developed as a 60 to 80 million ton open pit mine at sort of 2 to 3 ounces per ton with zinc and lead credits. The goal here at Ramsey is probably a silver grade in the 3 to 4 ounce per ton range, because they do have to deal with 100 meters of gravel cover that will need to be stripped off. And the market is responding extremely well. Gwen beat me to it when she got back from the trip and published a site view overview, which got the stock over 60 cents. Last night I published a good relative spec value buy recommendation at 61 cents. They put a rush on the assays. We could get them any time in the next couple weeks. The core rig is twinning hole number 2, which they are planning to deepen, but they also want to see the geology. It's now become very important to understand what is all going on in this system, so that as we start getting more delineation holes into this discovery, we can start piecing together the sort of deposit that we would like to see mined. Now, along with my recommendation, I published an outcome visualization where I said, well, what if we do have this 500 by 500 meter by 100 meter tabular body grading 4 ounces per ton or 125 grams per ton silver? And I hooked up some cost to it, and I came up with a pretty interesting number. If all this came together in this way that I imagined it, it would The stock could ultimately have a target price of about $18 a share. Of course, at the current stage where we don't have assays and confirmation of a discovery, the range is a little bit lower. Should be like 45 to 90 cents. So it is kind of fairly priced for this sort of scenario. There's only 33 million shares fully diluted. The company has managed to do financings without warrants. There is a chunk of stock of about 7 million done at 20 cents, which comes free trading in mid-July. If the company can report grades similar to what's seen in the Ramsey system, the stock will likely jump, but they will need to make sure that they finance the company, get $4 to $5 million into the treasury so that they can carry on with the delineation drilling. Now, the stock could go crazy because in an emerging discovery where you don't quite know the limits of the system, we get what's called S-curve behavior, which is this perverse tendency of the market to price very early in a discovery play what the project ultimately ends up being worth when it goes into production. And that usually eventually causes a lot of tears because the downside part of the S-curve, as we find out more and more about the limits of the system and what its costs are going to be, it ends up crashing back to where it should be, which will still be higher than what is so-called the rational speculative value right now. Interesting about this play is that an online portal of which I'm a founder, the Share Collective, they have started beta testing, and we have this Ramsey project of Arizona silver in there. So rather than just a newsletter writer like me who makes my living from being paid subscription fee and publishing something like this, which is just one voice in the wilderness, there is now a system at work where individuals can end up as a crowd do the same thing in a public space.
What is the Share Collective?
Well, a number of years I've been talking about the stuff that I do of trying to connect the dots and imagine what deposit is plausible for this particular exploration project and what sort of mine would be involved to exploit it properly. I felt this is not good enough for just one individual to do. It usually requires a spreadsheet to be set up to apply the discounted cash flow model over the life of the mine. And companies are supposed to do this. It's called economic geology. It's back of the napkin. Before taking on a project and spending any money on it, they should look at the size of the target. They should look at the grade potential. Or even better, they should figure out what grade do we need so that we know that we have a winner on our hands. And it's quite shocking that many of the juniors, the executives, do not do this. They just have an intuitive sense, this is going to be big and juicy, we're going to drill it, we're going to report splashy results. They do not have an economic vision in mind that their exploration is going to make or break. And even if they did, they're not allowed to share it to the public, because that can only be done when it's a proper 43-101 resource estimate, an economic study that's signed off by independent, qualified professionals. And this has been a big problem for the market because the retail audience, they're no longer being whipped into a frenzy by broker network hubs who are being whispered to by the company promoters and then who re-whisper stuff to the public. The public just sits there and reads these news releases on the internet, sees trading activity, can't make heads nor tails out of it. They see this, as I joked, that this gibberish that Arizona Silver published last week, geological mumbo-jumbo. They have no idea what to make of it. But the Share Collective allows them to go in there, put together numbers, put together tonnage, put together grades, recoveries, come up with a mining scenario, hook up costs, and there's been so many economic studies published. There's a wealth of information available where amateurs can put together these numbers. But most importantly, when they share that outcome to, say, the Ramsey project within the Share Collective, everybody can see it. everybody can post a comment to criticize it. They can copy it and resubmit it. So instead of this old stock forum model where you just have a linear thread of people pumping or bashing the stock, here you actually have a contextualized argument about what is it that we're seeing amongst the dots, what is taking shape, where is this going to be. So it creates an external object of expectation as to what is this play about. And this in turn facilitates placing bets in the market for what the next drill results will be. And so now we have a way for the crowd to do this and then converge on some sort of consensus equilibrium until the company produces fresh results which either confirm the consensus or require everybody to rethink it and resubmit it and see what it means now in terms of a higher or lower price for the stock.
Discovery Watch with John Kaiser will continue right after the break.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. John, the Ramsey project is an example of rethinking a feeble, depleted system. You've argued there's a new wave of interest in this type of discovery play where the goal is not to demonstrate the feasibility of an existing deposit at a higher metal price. Instead, it's to find new resources that can be put in production at whatever metal price we happen to have. Osisko's rethinking of the Windfall project in Quebec is the biggest such discovery story. This discovery exploration approach received a boost this week when Eldorado Gold agreed to acquire Integra Gold for $590 million in cash and stock. What are your thoughts on the disappearance of this Discovery Watch stock?
Well, Integra Gold is a pioneer in this approach of taking an old, depleted system in the Abitibi Greenstone Belt, in this case the Lamaka project that's east of Val-d'Or, where we have had a couple of the Sigma and the Lamaque underground mines. They were depleted. Integra picked up this project, raised a fair bit of money, and put its geologists who worked to rethink the controls of this system. And with the Triangle deposit, they had success in realizing there's a lot more gold here than was assumed in the past when everybody gave up trying to mine these resources right in the backyard of Val-d'Or. Now, in their latest resource estimate, they've managed to come up with 1.9 million ounces of 7 gram per ton indicated, plus another 1.3 million ounces inferred at just under 6 grams per ton gold. And it owns the old Sigma infrastructure, a 2,200 ton per day mill. So this is pretty much ready to go. They are driving an adit down into the Triangle system to further assess through bulk mining and underground drilling this resource. So this move by Eldorado to pick up a fairly advanced project with lots of tantalizing potential that's been teased out by the geologists. This is an important step for Eldorado because it has operating mines in Turkey, and Turkey is becoming more and more authoritarian, abandoning democratic principles. So it's probably not the best place to have a mining operation. Their development projects are also in Greece, which has also not been the greatest place, the most stable country in Europe. So acquiring this project in the Abitibi Greenstone Belt, in a reasonably secure jurisdiction of Canada, and in this case Quebec, is a very important step. Now, the market was not pleased. It knocked the stock back from sort of $5 to $4.60 when the news came out, and Integra Gold, it bumped up 80 cents to about $1.15. The deal is that you can either get about a quarter of a share or $1.21 cash per share from Eldorado. But Eldorado has limited the cash payout to $129 million, which means that if everybody wants their $1.21 cash per share, they'll end up being prorated between shares and cash. There's an alternative option which is guaranteed, where you can get about 0.18 Eldorado share and 30 cents. And so that will be the first level of calculation. But Eldorado is an established company with a substantial institutional following, and the significance of this buyout is that it puts about $600 million into the pockets of a wide range of investors, from retail to institutional. It endorses this approach of rethinking these old districts and putting money to work in geological talent to show that there's a lot more here than was thought in the past, and we don't need $2,000 gold to make it work. So that's the good news. The bad news is that Integra had the Lamaque Deep drill program underway. Now, Lamaque Deep is the projected intersection at about 2,000 meter depth of the old Lamaque and Sigma high-grade zones. And the idea is that where they converge, there could be a blossoming of gold, very rich grades, an awful lot of gold. And so they've been drilling this deep pilot hole, which when it gets to the target depth, they'll drill a fan of wedge holes to see if indeed there is some, multi-million ounce high-grade chunk of gold down there that would, of course, completely change the value of the Lamaque project overall. So Eldorado, in essence, gets this blue sky for nothing, because this valuation is based on the triangle resource and what Eldorado can do putting that into production.
Arizona Mining published an update this week for its Hermosa Taylor project. Anything new worth mentioning?
Well, there's a couple things. First of all, they announced that they did close that $110 million financing from South 32 at 245. So they are all cashed up, ready to go. The important news that came out along with another batch of new results is that they have decided to push completion of a feasibility study from sort of the end of this year into the first half of next year, 2018. And the reason is that the additional drilling that they've been doing to test the Taylor Deep zone as well as these trench veins is telling them there's an awful lot of potential additional high-grade resources which we need to know about so that we can push it into the front of the ore schedule so that we can get payback even faster. For example, they reported a hole 437. I mean, it had a great intersection of 37 meters that graded 11-ounce silver and 12% combined lead zinc. It was drilled at the edge of the patented claims. The Forest Service has continued to resist giving them any sort of drill permit, so they're sitting on the edge of their patented claims, drilling these angled holes to try and probe the limits of this system. Now, this is 900 meters deep, but this is really good grades, telling them that this Taylor Deep zone is very, very interesting. And on the trench vein, they hit 2 meters of 18-ounce silver, 28% lead, and 5% zinc, and they're also starting to see some copper show up. So their focus now, they're expanding the drill rigs from 6 to 9. They are going to be going constant throughout this summer to put together an additional resource so that when they get down to doing the feasibility study, they have an ore schedule that will have an awful lot of very high-grade material up front.
Coming up, John Kaiser's closing comments.
GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond, recently discovered in Africa by a fellow Canadian junior, with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Welcome back. John, we've seen a flurry of drilling startup announcements this month. One of them is Defiant Silver, which you introduced as a Discovery Watch candidate last September. What can we expect from this drilling round?
Well, Defiant Silver is finally going back to its San Acacio project in the Zacatecas district, where it spent the last few years trying to build up ounces by drilling beneath the old workings of this very high-grade mine, where it was like 600 grams per ton silver, sort of 20 to 50 ounces silver per ton, very high-grade mine. All this stuff mined out, but the previous operators they would only go so far before the water table became too much of a problem. And what Defiant Silver is doing is it's drilling deeper, looking for ore beneath the mined out ore. It's also looking for chutes between the chutes that the old-timers had figured out and depleted, to see if there were any overlooked. So the bread and butter that they're doing going back in there is to tackle the Almaden and the Esperanza zones, check those ones further down dip. But there is some potentially new, exciting developments that could happen. In the Guadalupe area, they encountered a quartz pyrite breccia zone, which was different from the normal stuff that represented the ore in the history of this mine. And it seems to be a new system that's potentially richer in gold and zinc than the silver ore. So they are going to be drilling some holes in that area too, to see if they have a discovery within this old discovery that they are trying to extend down deeper.
Highway 50 stopped its drilling program at Monroe in early April to allow for spring breakup. Have they resumed drilling yet?
They have indeed resumed drilling. They used the interlude to raise about $550,000 through a private placement of 1 million flow-through units at 55 cents. They had stopped hole number 3 at a depth of 785 meters. About 40 meters above that, they had seen this type of alteration, which has been observed in the hanging wall of the Sullivan deposit. And of course, the Sullivan deposit was this extraordinary discovery, 160 million tons of 6% zinc and lead and 2 ounce per ton silver. And what they're looking for here is a similar deposit that doesn't even have to be as large. In fact, I have done an outcome visualization where I've assumed that let's say they come up with 60 million tons of this 6% zinc and 6% lead plus 2 ounce per ton silver. And they mine it at 9,000 tons per day underground. It's a scenario quite similar to what has been envisioned for the Hermosa Taylor project of Arizona mining. And I said, what would that be worth today if it was found indeed at this sort of 800 meter depth on the Monroe project? And such a deposit would be worth about $3 billion Canadian. So with about 42 million shares out and a 50% interest, that would translate into a $36 stock price. Now, of course, until you produced the feasibility study and got a permit, it isn't worth $3 billion. At this stage, the stock is fairly priced in this 31 cents to 91 cents. And if they can push this hole deeper and come up with the CDEX style silver, lead, zinc mineralization similar to Sullivan, well, then that stock would kick up into the 90 cents to $1.80 range, where it would be fair speculative value for this type of $3 billion outcome that I have visualized. It's different from the Ramsey situation in that we're not looking for the faulted offset of the Sullivan deposit, such as was done about a decade ago when there was a lot of excitement, deep drilling for the down-faulted portion of the Sullivan deposit. In the case of the Ramsey deposit of Arizona Silver, we know the system is there. There is a geological model for the fault offset. Drilling has encountered the rocks that are very similar. We don't have the grades there, but we know we have the system here. In the case of Monroe, it's an entirely new pancake of CDEX mineralization. It would be a standalone blind discovery. And so that's why the stock is going to be very quiet until it actually hits it. And these CDEX systems, they are laterally very extensive. We would probably see very crazy S-curve activity if they indeed can demonstrate that there is a lead, zinc, silver discovery in this hole. Failing that, they're going to go back to the holes number 1 and 2 drilled last year and deepen those. They've realized that the system is deeper in this part of southeast British Columbia, so they're pushing those holes deeper. We will see. It's a good stock for Discovery Watch. And again, there's a huge audience out there ready to jump in upon confirmation that we do have a Sullivan 2 by the tail.
Nickel prices are back in the dumpster, yet First Point Minerals just raised money to fund a drill program at Dakar. Why is nickel back in the doghouse, and shouldn't First Point be hibernating in a cave?
Well, the bad news for the nickel price is that the environmental minister in the Philippines that Rodrigo Duterte appointed, Gina Lopez, she's an environmentalist, environmental activist, but her zealotry was such that she shut down so many mines in the Philippines, or at least ordered them to be shut down, including even some gold mines operated by Western companies, which weren't going to get away with raping and pillaging the countryside in the way that domestic operators have been doing with these nickel laterite ores. So a committee that reviews the appointments by the president of the company to these various ministry positions rejected her earlier this month. And of course, that means these mines are not going to be shut down. They've got a new person teed up to take over who appears to be, sympathetic to the mining interests. But I have a suspicion that the worst offenders are going to be shut down. But it's not going to be a substantial curtailment of Filipino nickel supply that the market had been hoping for, which is why it sank back from that $5 a pound level to the $4 a pound level. We will see it's bouncing a little bit right now. But what First Point decided was, okay, in this context where it is unclear when this overhang from the Philippine nickel pig iron destined laterite production is going to end, they decided that we need to do the drilling for the extension of the Baptiste zone where they had encountered these 0.15% Davis tube nickel grades in 2012 when they were delineating the system. So they did a financing of about 8.3 million shares at 10 cents to raise $830,000. They are going in there and going to do a 2,000 meter drill program to extend this stuff, and hopefully if they can come up with, say, 60 to 80 million tons of 0.15% Davis tube nickel versus the 0.12% that Cliffs used in its PEA as a life of mine average, this could help the economics. And then, in a style similar to what Arizona Mining is doing, is if you can put higher grade material into the mill in the beginning of the mine, you achieve payback much faster. And with all these mine developments, it's payback of the capital cost, which is the paramount goal, because that should happen within 3 to 5 years, and the faster it happens, the better. Then you have exposure to upside in the metal price down the road. So for the nickel optionality bettors, this is one of my bottom fish recommendations. This is good news. The company's not just going to be sitting there waiting for the nickel price to go up. They're going to do meaningful work this year so that when nickel prices do finally come out of their doghouse, this project's ready to go into pre-feasibility mode.
John, thank you so much for the update.
It's been a pleasure, Jim.
We've been talking with John Kaiser, his website, kaiserresearch.com. Discovery Watch will be back next week. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.